Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news reality checks are appearing globally. First, and as expected, the US Federal Reserve made its first rate cut since 2008, taking its upper bound benchmark rate from 2.5% to 2.25%. Chairman Powell says more cuts may come. It also ended its program of selling down the bonds that had built up during its quantitative easing program. It was due to pause that program in September anyway, however. On the news, the US dollar rose marginally, benchmark bond yields fell, and Wall Street equities fell sharply, down 1.2% so far, which reflects a growing understanding of the underlying economic risks ahead. Overnight, there's been more evidence of the US factory sector struggling. The widely watched Chicago PMI has come in with a deeper contraction. In fact, it's its weakest level since December 2015. In Shanghai, the trade talks haven't resolved anything, but at least the two parties are trying. The next round is scheduled for September. And elsewhere in China, another large private company, this time a car maker, has defaulted on a bond. To contain risks like these, officials are now saying China will accelerate its debt for equity swaps of qualified companies to reduce high corporate leverage. China's factory activity shrank for the third straight month in July, underlying the headwinds facing them. Now China's official PMIs show that contraction eased somewhat. However, their services sector, which is still expanding at a healthy rate, slowed slightly in July. The latest negotiations for China's favoured trade deal, the RCEP, are wrapping up with good progress claimed in the 27th round of talks. But fault lines are developing. New Zealand and Australia have been keen promoters of the 16-country deal, but reservations are growing about investor protections. And India is showing increasing reluctance at China's pushing. There is now talk that the Chinese will elbow India out of the group, and possibly New Zealand and Australia too, unless they get their way. But many other smaller countries too are growing uncomfortable about how things are going there. In Japan, the latest data on vehicle production, housing starts and construction orders all beat modest expectations of analysts. But Japanese consumer confidence is still in the pits and getting worse. The US Treasury 10-year yield is now down to 2.01%. That's down 6 basis points on the Fed rate cut. Gold is down to $1,417 an ounce, which is a $13 fall overnight. US oil prices a little changed today. They're still just on $58 a barrel, and the Brent benchmark is just on $65 a barrel. And the Kiwi dollar starts today a half a cent lower on the Fed cut, now just on 65.6 US cents. On the cross rates, we're softer at just on 95.9 Aussie cents. Against the euro, we're a little lower at 59.2 euro cents. That all pushes the trade-weighted index down to 71.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.